viewers, welcome to my YouTube channel Learn and Earn. In this video, I am going to explain you about what is the meaning of PE ratio and EPS and what is the difference between them. So before explaining this concept, I want to explain you about what is the actual concept of understanding the fundamental analysis. So whenever a particular company or a particular share price, if it is not able to rise or if it is not able to perform well in coming times, so you have to understand that technical analysis is not only the only way where you can expect the price to come down or up, but fundamental analysis also should be taken into consideration. Then only you can say that whether this company is going to perform good or not. So in that fundamental factors, in that fundamental analysis, this is another video where you can save it in the folder of fundamental analysis. So PE ratio and EPS are one of the important segments in speculating a stock, in understanding a stock of a company. So PE ratio, the general formula that it says that PE ratio is nothing but when a market price per share is divided to its earnings per share is called PE ratio. So this price earning ratio, what we say, so what happens is whenever the market price of the share, let us say the market price of a share is some 1,000 rupees and the earnings per share, whatever the EPS value is there, so if that value is divided with this value, so you will get a particular answer. So that will be the PE ratio. So here how exactly we can interpret with the PE ratio whether the company is overvalued or undervalued, the share price is overvalued or undervalued. So whenever the PE ratio is showing you a very high level, like for example 40, 50, 100, so when it is above 12 to 15 level, so the crucial level when it is crossing that 15 level or above, so whenever it is increasing, so it means that the market price per share is increasing and EPS is not that much good. So whenever the market price increases, it means that the price is overbought, so we cannot expect good returns on that company when compared with the PE ratio which is less to another company. So like that, you can expect very good returns if you invest into a stock which has low PE ratio. And here also I want to explain you that PE ratio, if it is high, we cannot say that the stock price will come down, and when PE ratio is low, we cannot expect that the price will go up. So again here the technical factors also will come into the picture and company fundamentals also come into the picture. So this is only a concept where you can put with a combination of all the analysis and then you can come into an idea. So here the earnings per share also has an definition. So the earnings per share is nothing but the total income that the company is generated. So in that, the dividends whatever it is giving to the shareholders and investors, so that is to be reduced, that is to be eliminated, and once it is excluded, so whatever the amount is there, so that should be divided with the average outstanding shares. So whatever shares it have, it will be the remainder value, so the down. So net income minus dividends on preferred stock divided by average outstanding shares is EPS. So here EPS, if it is increasing, the value of EPS is increasing, it means that the company is getting very good income in its business and it is able to make good business. So like that we can understand if a company has a good EPS and previous financial years also we can see a growth in EPS. So definitely we can expect that the company is going into a good business and everything is fine with the sales and the profit as well. So like that the EPS value differs so that we can see if the increase in EPS is happening in a company, so the company is getting good income and company business is good. If EPS is down and it is getting down and down, so the company income is getting decreased and company is not able to perform well in its business. So we can understand with that. So now I will give you an example. So previous video, as I told you about fundamental analysis, so based on the same video I am explaining you on automotive field. So here we can see few companies like Bajaj Auto, Hero Motocorp, Eicher Motors, TVS Motors, so Endurance Tech, Atul Auto, Atlas Cycles. So these are the companies you can see. So here when you compare the share prices, so Eicher Motors have the stock value, each share has 28,370. It is very high valued, and a common person cannot have more shares when compared with Eicher Motors to other companies. So here a common investor, if he is looking for an investment without having any knowledge of fundamental analysis, so what he will do is his concentration will go into Atlas Cycles. Why? Because it is quoting at 166 rupees 20 paisa, and he will neglect the big stocks which has a big value like 2744, or Hero Motocorp having 3542.80, or Endurance Tech which is having a share value of 1264.85. So why he is neglecting that? Because whatever the amount he have, so with that, if the share price is less, he can get more stocks. So that is the only thing he has in his mind. So for that reason, what happens once he is investing the amount into the stocks, into the holdings, so he is expecting the returns, but the stock may rise, may not rise. But how exactly he can know whether the stock will rise or not? So here we have to see the PE ratio. So here, if we see the PE ratio, so we can clearly see the PE ratios are different values for different companies. So though, as I said you, the Atlas Cycles has a good PE ratio, that is 22.95, but still if you compare with other stocks, for example, if you see the stock of TVS Motors company, so it has a PE ratio of 47.34 and the stock value is 619.30, and Hero Motocorp is 3542.80 and P ratio of 20.62. So here TVS Motors, those share price is less, and Hero Motocorp the share price is more. So without looking into the P ratio, if the person might have taken the stock of TVS Motors and if he is waiting for a good return on investment, return on equity for 5 or 10 years, and other person, if he had invested into Hero Motocorp and he is waiting for 5 or 10 years, the chances are more for a person who had taken the Hero Motocorp shares, because the PE ratio is very less when compared with the PE ratio of TVS Motors company. So like that, we have to understand the PE ratio concept, and we have to include the technical analysis concept and the rest fundamental indicators. Then you can go for the long-term investment. So thank you for watching this video, viewers. Please don't forget to subscribe my channel. Thank you. Have a nice day.